The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey everybody, this is the tired tax lady, I'm going to tell you. And I want to wish everybody happy Easter, and it's basically today, tomorrow, and Monday, because Monday at midnight is the end of the time for you to timely pay your taxes. Now, they don't care if you don't file them. They just want to make sure you got your money in. The money deadline is Monday night. And so you say to yourself, well, how can you get them the money without doing the return? Well, you have to kind of figure out a good guesstimate of what you think you're going to owe, and you got to send that in. Now, you can go to the IRS website and pay it electronically. You can start your own account and pay it electronically through a direct debit. You can use a MasterCard Visa. You can make sure that your check, you got a voucher and an extension. You can go to the post office and get it postmarked with the money. All I can tell you is money is due to the state of New York and the federal government on Monday. And if you haven't filed, you better get your extension in. But the money comes with the extension or else it's no good. And I'm joined in studio with Tiff. Hey, Tiffany.
Hey there, Esther. Happy Saturday and happy Easter to everybody listening. Yep. And then you mentioned tomorrow, that's a day, but tomorrow's Easter, but I think we're going to be burning the midnight oil.
I'm somebody that is very Christian. I believe in the Lord, and so we are going to be closed officially tomorrow, except for our mall office.
Right, McKinley Mall.
But we will be back bright and early on Monday morning. We're here tonight, by the way, till midnight.
I was here till 12:30 last night.
But anyway, we're here to help you. The important thing is you want to make sure you get your taxes done. The big thing is, let's say you owe money, and you say, well, I'm just going to save up until I get the money. Well, what you're doing is you're defeating the purpose, because the failure to file your return penalty gets up to 25% in 5 months. So you think about owing $10,000 with the 25% penalty. Now you've just added another $2,500 to the balance due. So you want to timely file your return. The failure to pay penalty is only a 0.5% a month.
So the important thing is to file the return.
That's the important thing. Right?
Yeah.
Anyway, I'm Esther Gulius, the tax lady. 8030930, 8030930, star 930 on a cell phone. We want to talk taxes. And don't forget about the NY229. Do lots of NY229.
I do. I sort of get excited. Today I did a fist bump when somebody got it. I was very excited for them.
I had a client.
They haven't had a state refund in 20
I had a
years.
client yesterday that came in and they said, I really shouldn't have to file, right? And I said, did you bring your property taxes? And they said, oh, I don't have to do that anymore. And I said, oh, don't you watch my commercials? They change the law all the time.
Right.
And so I got him $350. I was happy, right? All right, let's go to the phones, and we're going to talk to Steve. Hey, Steve, how can we help you, sir?
Yeah, how you doing? I have a question about dividends.
Yeah.
The difference between qualified dividends and ordinary dividends, and are they taxed differently?
They certainly are. So anytime let me say back up to say this, much of tax law, you find that different things are taxed differently. One of the things that is taxed differently is capital gains and qualified dividends. Those are taxed like capital gains, and they get a favorable rate. So that if your tax bracket is under 12%, you pay 0% on qualified dividends and capital gains. So you certainly want to use the worksheet on the Schedule D to do the computation, because you save a lot of money, especially if you're in the 38% bracket. then you'd be limited to 20% on the capital gains, but you'd save 18% on your qualified dividends and your capital gains by using that worksheet on the Schedule D.
And some of the dividends have a QBI that you're available to, and that means that the money was invested in a qualified business, and so you might qualify for that
Right,
QBI.
and if you are in a mutual fund, you might have foreign taxes too. But yes, the regular the dividend and the qualified dividends get preferential tax treatment.
So you show the qualified dividends on the Schedule D. That's where you work it out.
That's correct.
The dividends are on a B.
Right.
B.
Well, you start off at the B,
Yeah.
and then you do the computation on the
the
D
D, yep.
worksheet.
Great. Okay, thank you much. Appreciate it.
You're very welcome.
Bye-bye.
I'm Esther Gullius, the tax lady from EG Tax. We are, we've had people, we've done 1,000 drop-offs at our corporate headquarters in the last 4 days. So people are filing late. I think that they're used to getting these long extensions,
false
and it's
sense
like,
of
boing,
security.
they hit them in the head, and they said, oh, gee, I think we got to do these tax
People
returns.
were lulled into that false, because I think the first year of COVID, there was a couple of months, and then last year there was one month.
Now we're down to no months.
Yeah.
We're down to 2 days.
Right.
And no matter what, if you need an extension, you can come to EG Tax. We'll make sure that we get your extensions. Then we'll work all next week to do the tax returns. Okay?
Yep.
And let's go to, is it Chris? We got Chris next. Hey, Chris. I'm Esther Gullius, the tax lady. How can I help you?
Hi, Esther. A couple things. One, I called about my kids, but you said something at the top that jogged a question on mine. So I'll ask you the kids real quick, then go to mine if I could, please.
Yeah.
I have 2 children. They're both students in local colleges. They both have little jobs in local grocery stores, which they get W-2s for. But the bulk of their W-2 income is actually a work study. It's part of their financial aid.
Uh-huh.
But when I filled out the taxes this year, they did their own last year because you had recommended for the stimulus to do them separate. But this year, it's my understanding I can use them as deductibles again, which I did.
Correct.
How old are they?
Theirs. But it shows I owe both a little bit of state tax on both their incomes. But
Right. You want to know why?
yes.
Because when a child is claimed as a dependent on the parent's return, the state of New York standard deduction, now the federal gives the kid the full standard deduction, but the state of New York standard deduction drops to almost a little over $3,000. So most kids think they're exempt because they don't have to pay federal taxes, but on the state of New York, the standard deduction is a little over $3,000, and most kids end up paying taxes. So what I always tell the parents to say to the kids, take $5 a payout extra for the state of New York so that you aren't disappointed next year.
But you are right. They probably owe. Chris.
Okay?
But you had a question for yourself, too?
Yeah, but for the kids, just real quick on them. But the bulk of that income was actually as part of their school aid program. That
doesn't have anything to do with it. You still, if
okay,
the income on the state of New York, if it's over like I think it's $3,300, the kid is going to have a liability.
And don't forget to look at their 1098-T form when you're doing your return, because if there's any room on that, you get a qualified education credit.
Well, the problem with that, I kind of get shafted there because unlike a lot of people, I thought ahead and I opened college savings accounts for them when they were.
Yeah, but you still get
Chris,
the federal. You still get the federal
on the
college
state
credit.
On the state, you're not going to get the credit, but on the federal, you get the credit.
And so you don't take it on the state, but you take the AOTC or the lifetime on the federal.
The 529 is only a New York State benefit, even though it does grow tax deferred on tax-free as long as you're using it for education. But on the federal, let's say your kid had $10,000 in tuition and you took $10,000 out of the 529. The 529 you're going to get nothing on the state, but on the federal, the first $4,000 qualifies for the AOTC. So you will get it on the federal because the 529 doesn't do anything on the federal return.
Because we've done this. I mean, my son's graduating this year, and they told us because we took it from qualified college savings, we couldn't deduct.
No, then you should amend your returns while you can. You have
Four
money
of them.
coming back.
That's what I do them last year.
Just only $2,500 a year for the last 3 years.
Oh, my gosh.
$7,500.
Well, still, yeah, that's a good chunk of change then. So I can go back and amend
Yeah,
last.
I think you should.
Well, I probably can't because last year's you got an extension on, but yeah, we'll have to look into it then.
Yeah, but I mean, you have 3 years to amend your return.
But the 15th, it's usually the date they're due. So someone
The 2018 closes.
2018 closes on Monday.
It does. Okay.
Okay.
I'll be getting
You
it.
can come by
All right,
at
so-
Colvin and bring your 1098T, and I'll look at it
On New
quickly
York
if you want.
See, there's
Okay.
a real property tax relief credit.
Yes.
I was in West Seneca. They take the star, they apply it right to my tax bill. So let's say my taxes are $4,000. I only pay $3,000 because they put the 1,000 on. I've never really noticed that before on the tax thing. Is this something I should be concerned about?
I'm missing what you're saying.
I know. I was going to ask you to repeat it. I'm sorry.
Sorry, I'm talking. The New York State real property tax relief credit, they're calling it. I don't know if that's something new because of the COVID.
Yeah, the 229.
It asks if you've owned your primary residence for more than 6 months. I've owned it for years and years since my born. But
Right.
I pay the property taxes, but my star is, I get my star, I don't get a separate check. It gets,
Then it's already off of your tax bill.
right. So,
So you're going to take the net
credit.
bill and use that on the 229. You're not going to subtract it twice.
Right. No, it's, yeah, that's what I'm saying. The property relief is the star. Is that another name for the star credit?
Yeah.
Oh, okay. I've just never noticed it before when I've done them. My stars are pretty straightforward.
Well, yeah, on your school tax, many, if not most people, have the star reduction on the school tax bill, and they pay the net amount. And so when you're figuring the 229, you use that net amount, unless they're mailing you a star rebate check to your house. Then you would do it because the amount of taxes paid up front is not correct, and you'd have to reduce it by that star rebate. If you got a check, but most people get it right as a deduction on their property taxes.
It has nothing to do with it. Then just to go back to the kids, that 1098T, the form for what we paid for college, use that on my taxes, not my taxes then?
Right. And you should have in the last couple of years. You know, seriously, you got like, if it's the last 2 years, probably $2,500 a year times 2 is $5,000. That's a lot of money.
Taxes in my financial guy that
Okay.
they couldn't deduct it. So, but you're saying I can, even though
You can.
You can.
You can. if it wasn't all paid by scholarships. I
Right.
mean, and aid.
Scholarships.
You have to look at the 1098T really carefully.
Okay, Chris?
Right. Some was scholarships, but the bulk of it was our assets from their education savings funds.
Yep.
Yep.
So that is deducted.
You got money on the table.
Think about
sounds
it.
like.
The 529 is only deductible on New York State. Why would you think that when you
weren't entitled.
the only place that it's deductible is on New York State? It's not deductible on the federal, so it doesn't affect the AOTC on the federal. It only modifies or eliminates the
270.
deduction on New York State.
Okay, so if I have them do it Monday, I can go back till 2018 at least.
That's right.
And I
Right.
have 2 students, so it's probably worth looking into.
Okay. I would think so.
Been very helpful.
$5,000 a year.
All right. Thanks, Chris. Happy Easter.
Easter.
Bye-bye. I'm Esther Golias, the tax lady from EG Tax. We're going to take a short break. We're going to be back with your calls, 8030930, 8030930, star 930 on our cell phone, 716-8030930 if you want to text us. See you on the other side.
We are family. I got all my sisters with me.
It's wonderful to meet all these great people who are absolutely panicked right now. Like
Oh, I
turn my
can
mic
hear you
on.
better.
Yeah, who are completely panicked right now because they need to get their stuff done. And believe me, we're as panicked as you are because we're doing what you need done. So, again, Monday is the deadline. I'm Esther Golias, the tax lady. 8030930, 8030930, star 930 on your cell phone. Wanted to say that if you owe money, double check your work. I'll give you an example that our guy from West Seneca, wasn't he West Seneca, that just called? Nobody sends you a note and says, oh, by the way, you didn't get a $2,500 refund that you're entitled to. You know, that's why taxes are so confusing.
Yeah.
So double check your work, make sure that everything is done that can be done. Another thing, open an IRA. This morning I was with a couple who was getting a $3,500 refund, and they were happy as clams. And I said, well, you know, you guys, they have substantial assets, and he's like 73. They're still working. He's still working, and they could have done a spousal IRA and a regular IRA of $14,000. And they said, "Well, why would I do that?" And I said, "Because you get an extra $3,500 refund if you do that." And they said, "You mean if I just move it from this side of the bank to that side of the bank, I get $3,500 extra?" And I said, "Yes, that's available to you too. Even if you got a refund, if you have a balance due, look at that. At least the money stays in your bank account, right?"
Yep.
All right,
I've
let's
had
go
several
to the
people do
phones.
that.
We got Alan. Hey, Alan, how can we help you?
Yes, sir. Yes, hi. Thank you very much. Okay, two quick questions. Number one, I had my taxes filed with your Sheridan Drive office on Wednesday the 6th, New York
Okay.
State. And I went to their website, checked your refunds, and it says if you file electronically, it should take about a week. Should I panic because there's no information? There's no information yet? Are they behind like the feds are and everything else on your check your refund status?
Did you say it was New York that you didn't see anything?
They filed on the 6th of April. And
Well, you know, the best thing to do, I mean, I have to tell you, we get them out right away. So, and New York State is acknowledging right away, right? But what would their website say, Bob?
well, it's just the New York State.
No, hang on. My IT guy's here.
Oh, okay.
Typically, they're usually updating within 3 or 4 days.
He was saying normally it's 3 or 4 days.
And he said the
What
6th.
you might want to do, Alan, if you can wait until Wednesday, just give our corporate headquarters a call, 632-7886, and we'll go into the database and make sure that it was acknowledged. But I can't see any reason why it wouldn't have been acknowledged.
You're
But
right.
we can double
Okay,
check
but
for
we'll
you.
double check on Wednesday. And I say Wednesday because
Today's
right
too
now
busy.
it's a little bit of a
Yeah.
flurry here.
Yeah. No, I got a copy of it, and I e-signed it, and all that.
Yeah, so I'm sure it went in. We have no control over what kind of stuff they do, but call us on Wednesday. Then we know it was acknowledged, and you can rest assured on that.
Okay. Second question.
All right,
And
Alan.
did you have another
Thanks for
question,
calling.
Alan, or is that it?
Yo, hold on. Can I ask a second question?
Yeah.
Hello? Yep. Okay.
Yes.
Tax consequences of inherited IRAs. My mother-in-law passed away a couple of weeks ago. There's 3
Oh.
siblings, my wife and 2 siblings. The will states her assets are divided amongst the 3 of them equally. A lot of those assets are in brokerage IRAs. She's had them for years and years and years, so I'm sure they're traditional and not Roth. What are the tax consequences?
Well, she has, as an heir, beneficiary, she's going to inherit that portion that goes to her, and she's going to have to roll it over into an IRA, beneficiary IRA from a decedent, and she has a 10-year period to take that money out.
Okay, so the money can stay where it is until they figure out what they want to do, right?
Well, yeah, there's going to be somebody that's got to be in the steering committee to take care of it, but then they'll give it to the heirs based upon the will, and then she would then roll it over into the IRA, and she has a beneficiary IRA from a decedent, and she has 10 years to take that money out.
10 years, right. So we're
Right.
like 64 years old, so RMDs come into play at that point anyway, right?
Well,
72?
well, she's got to start taking it out and have it done within 10 years. Yes.
The entire portion that, now can does it have to be a new account? Can it be commingled with an existing?
No,
IRA?
it's got to be separate.
A new IRA has to be.
Because the code on that IRA is not going to be a 7, it's going to be a 4, which says to the IRS, this is an inherited IRA.
Right, and there may be one Roth IRA which she might have opened up, the mother-in-law.
Right, and of course, that's going to be tax-free anyway.
There's no tax consequences to that.
That's correct.
Right? She could just
Yep.
take the distribution right away without any
Right.
consequences. She's over 59. Got it. All right, that'll do it.
Hey, thanks, Alan.
Sorry
We'll talk
about
to you
your
later.
loss.
Okay, and we're going to go to Hank. Hey, Hank, how are you?
Good. How are you? Got a question. I heard you talk about how grandparents can write off their grandkids if they're taking them to school and babysitting them afterwards.
Oh, what I'm saying is, if you are paying, if parents are working and they're using the grandparents as daycare providers and they're paying them, then what happens is that grandparent then would have a Schedule C, self-employment, and can then reduce the amount of money that was paid to them by their children and for caring of their grandchildren. And there are liberal deductions for having a child in your home that you're babysitting.
All right. That.
Okay. I
Thanks.
don't know if I passed the test.
Yeah, so that's about child independent care
Right.
credit.
Right. And the thing is, let's say that the grandparent is getting $5,000 babysitting. When they do their Schedule C, they're able to take the office and home, which
Right.
is the entire space divided by the number of hours, multiplied by the number of days, number of hours divided by the total usage. It gives an office and home, so they're able to take the property taxes, the mortgage interest, the insurance, the repairs and maintenance, the food that they give to the kids, their own grandkids.
Yeah.
Maybe the travel they take them. Maybe they're taking them to the doctor. All of that's deductible, and toys, et cetera, et cetera. And that really reduces the amount that the grandparent would have to pay in taxes. And the parent, of course, giving the money to the grandparents can get a deduction up to 50% of what they pay them, which is a lot of money.
Yep.
Okay,
and
let's go.
Let's
We
face
got
it,
some
the new child independent care credit is large.
large.
Okay, good. We got a text. It says, I believe Chris misunderstood your answer on the IT 229. He is believing the STAR credit and the IT 229 are the same thing.
Oh, thank you for clarifying that. I didn't get that, but perhaps that's true. Okay, we got a break for the news. Thanks for the information there that I misunderstood. And we're going to see you on the other side. I'm Esther Gillius, the tax lady.
We are family. I got all my sisters with me.
Hey, everybody, we are family, and we are pooped, and we got 2 more days left to go, and we will get her done. If you haven't filed, you got to get that payment in before Monday night at midnight to the IRS if you want to avoid the penalty. Obviously, the penalty is based upon the number of days past the 18th that you file. And so you want to do that. Wanted to also tell people, by the way, I'm Esther Gillius, the tax lady, 8030930, 8030930, star 930 on a cell phone. If you haven't received your 2019 refund, that's part of what we do so well. Tiffany is like, she's got the patience of Job, and she will sit down, do a 3-way call, and help you to sort that out because they still haven't processed a lot of returns.
Yep. There's a form 3115 for missing refunds, or if you think you're missing any of your stimulus, you can also fill that out. There was the 600, there was a 1200, and the 1400. So there's forms too.
And so she'll sit down and talk with you. Obviously, not until after the 18th. And the next thing I want to talk about after I get these phone calls done is what do you do in the summer if you get a refund? I mean, if you get a letter, how to handle that. So, and if you're getting letters right now. Okay, let's go back. Well, why don't we do this text? What does that text say?
It says we had cash out refinance of our primary home mortgage last year. We used the cash out funds to purchase an out of state vacant land. How much of the mortgage interest is tax deductible?
None of it. Because under the change in the tax law that took place under Trump, the only thing that's deductible as an itemized deduction is the direct debt tied to your personal residence.
But could they take it on a state?
So if you took the equity out of your house to buy something other than something that's going to improve your personal residence, it's not deductible. What did you say?
On the state?
On the state, you can take it.
On the state, you could
but
take
not
it,
on the
potentially, if you itemize.
federal. Right. Because the state and the federal have two
Decoupled.
different set of rules. It's bad enough that there's rules for the federal, but there's a completely different bunch of rules for the
I
state.
was doing alimony and it was tax free on the federal. I'm like, I got to put it on the state though.
Right. Absolutely.
It's so
okay, why don't
confusing.
we go back to the phones and we got Peter. Hey, how are you, Peter? How can we help you?
Thank you.
You're welcome.
Can we help you?
Yes, you can. What happened
I'm
is
ready.
I filed my taxes,
Okay.
got the refund about 2 or 3 days ago,
Okay.
and that's not the problem, but the problem is that my mother passed away in December of 2020. And she about the only asset she had that she left to us. I have 3 siblings, and the 4 of us were supposed to split the house 4 ways.
Mm-hmm.
The problem was just before she passed, in case she had to go into a nursing home, they put it into an irrevocable trust.
Uh-huh.
And now, when she passed, the trustees were one of my sisters and myself. And my sister's doing her taxes now, and she says that her tax guy told her that because the assets came out of a trust, that we owe taxes on it. And
okay,
all the
right. So let me back you up here, Pete.
Yes.
If your mother put the asset into the trust when she was alive, then the basis of the asset goes back to her original cost plus improvements. Okay. Then, if the trust sold the house, since the original basis is probably very low and you sold it fairly high, then it's going to distribute the money subject to taxes.
Okay, so when
That's why people have to be really careful about trusts, because trusts pay taxes at a very high rate. And the best thing to do is if you have trust income, is to make sure you distribute it to the trustee before the income comes in. For instance, the other day I had a trust that had an IRA deposited into it in the amount of like $80,000. The sad part is the trustee, and it's in another irrevocable trust, the estate is going to have to, the trust has to pay all these taxes on that IRA. And so if it went into the trust as a donor, it goes back to the original basis, and it was sold in the trust, then yes, you guys are going to have to pay taxes.
Okay, so we're making a list of capital improvements from the time they bought the house.
Well, that's good.
Until it was sold, and
include the expensive sale as well
in the trust.
Yep.
So once we determine what that amount is, the amount of the sale, and we subtract the capital improvements,
then you have a gain divided by 4, and that'll come out in the K1 to you guys.
Okay, we have to make out as trustees. My sister and myself are trustees.
Now, did the trust sell the house then?
Yes, we did.
Okay, so then, so then that'll be it. It's the trust. If the trust is paying the taxes, then the trust will pay the taxes and distribute to you guys according to the terms of the trust.
No, we did not do that. We distributed all the money that was in the trust.
Okay, but yes, make sure you guys do a good job reconstructing the basis so that you can reduce the gain.
Okay. Do the individuals who received the people who received the money, do they have to pay the taxes then?
If the trust sold the house, and is the trust paying the taxes, or are they distributing to the heirs?
I don't know. I think the trust is now, in her will, she said to divide it up 4 ways. So
yeah, but she put it into a trust. So it all depends on it all depends on whether you have a simple or a complex trust. I can't say without reading it, but either the trust is going to pay at a higher rate, or you guys distribute to you if you can, and you would pay at a lower rate. It'd be much better for you guys to pay the taxes.
Okay, so it sounds like I'm probably going to, since I already filed my taxes.
When did you sell? When did the house sell?
Tax return?
When did the house sell?
In 2021.
Okay, then then you just have to amend it if you get a K1. Okay?
Okay, so would you recommend I send in a couple $1,000 to cover my portion, or?
Yep, it's due. I don't know. You figure 20. If it gets distributed and you guys are paying the taxes, the maximum would be 20% of your portion of the gain. So, once you got a pretty good idea, maybe you guys can put your heads together over Easter dinner tomorrow.
Would it be 20%?
Federal and New York State's going to tax you probably at 6 or 7%.
Do I wait for them to contact me, or do I?
No, you have to do it yourself.
Once you get the K-1, you're going to have to amend your return.
Right. Okay, Pete?
Okay. Thank you
All
very
right, thank you.
Sorry about your
Yeah,
loss.
I would have loved to spend the half hour with them, but what I'd suggest
Complex.
you do is, if you want to go to our website at egtax.com, ask the tax lady. I could help you further, more specifically, but again, it's going to have to do with whether or not they can distribute to themselves. If they can, it would be great.
Yeah, and I just want to sneak in this text. Somebody said, Chris from West Seneca needs to know getting star credit does not negate his possibility at the IT 229 relief. He seemed confused.
Yeah, we already talked about this.
No, there was another one, I believe.
Oh, it's the same one? Oh, okay, you're right.
Same, different
It looked like
person.
it just posted twice. But yes, so the 229 is the credit that you get for property taxes that you pay.
And you have to
and you
subtract
have
your
to
star.
subtract any star
Relief money.
relief that money that you get mailed to you. Otherwise, it's already been taken off your tax bill.
That's right.
All right. Let's go back to Jim in Buffalo. Well, yeah, we got time. Hi, Jim. How can we help you, sir?
Hi, I have a general question about my tax refund, actually for tax year 2020. I filed it last year on October 15th, and unfortunately I did have to file on paper because the IRS, for whatever reason, didn't accept my return. So I filed it on paper. I still haven't received the refund. I was wondering, and I called in January, and they said it's probably running 6 months behind. I was wondering if that's still true, and when I can probably.
He'd be a good candidate for that form, wouldn't he, Tiff?
Yeah.
Actually, yeah, but I think I would call with you. Did you? Yeah, that's a long time. I know it was a paper one, but I would like to call the practitioner line with you to even make sure that they have it, that they have your return.
Did they
since it was
actually
paper.
look it up, Jim, and see that it was filed?
No, I could not look that up because it wasn't accepted. In fact, when I called
when you called them, did they look it up?
a table, what's it?
I don't think you did. You call them?
Just sitting on a table. Yeah, I did. I called them. I actually tried.
Oh, you're right. You're right. He did.
And they weren't. Well, I didn't need an appointment. She handled me over the phone, and she was very knowledgeable and everything. She told me we're running approximately 6 months behind, and which would take it to right now, basically.
All right. Well, one thing I want to bring up is the reason the return rejected. Did they give you a reject code? Did you try to send it electronically?
I did try to send it electronically, and I don't remember the code. I just said, well, it didn't.
Okay, because I just want to make sure that there wasn't fraud, that somebody hadn't tried to file using your social security number, and that's why it rejected, and maybe that's what's holding everything up.
Yeah.
I would suggest you, if you got patience, give them a call again, or utilize Tiff, who's absolutely great, because she'll call in the practitioner
So
hotline.
when you called, did they say they even saw the return, or did they say they don't even see it?
No, she did not mention it. I don't know if she looked it up, to tell you the truth.
Yeah, I bet you she didn't. Sometimes it's just better to give somebody a pat answer because it's easier,
Right, but
Anyway.
I would like to call to make sure they even have
Yeah,
it in the
but give
system
Tiff a
because you
call
might want to send it
after tax
again.
season, 632-7886, and we'll call
Is
on
it
the
a big
practitioner.
refund? Is there a decent sized refund that you have, Jim?
It's a very large refund. Now, she told me one thing. If it's rejected, she told me just to put a 0 on there the next time, and it would automatically be accepted for the AGI. I don't know if that's new or if that's just
No.
So.
Okay. All right. We'll help you out later, Jim. But it requires some patience. Make sure they look it up. Don't give you some pat answer. I think we lost him.
But we can
I'm
do
Esther
break.
Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on our cell phone. Text us at 716-8030930. We're going to take a short break. We'll be back on the other side.
We are family. I got all my sisters with me.
Hey, this is Esther Golias, the tax lady from EG Tax. We have all of our offices cooking. I'll tell you right now, we're at the deadline. We're kind of like at the
Precipice.
last 3 minutes of that Bills game when they played Kansas City. I mean, we're down to the end. So Monday's it. We want to help you talking about important things. If you get a letter in the off season, the important thing is not to ignore the letter. A lot of people get that first letter and they put it in a garbage can and they might not get another letter for 3 or 4 months, and you think that because they haven't been dogging you right away that you're okay. When you get that first letter and you don't understand it, give us a call. We do not charge to go over and interpret the language on the letter, because so many times people don't understand what they're saying because they're talking to you in tax lingo. It's like getting Spanish if you don't understand Spanish.
That's
true.
true.
So we will help you. If you look at if you're able to understand it and you realize, oh, that's right, I didn't put the unemployment on my tax return. Make sure you pay that liability right away.
A lot of people too who did the 3-year CARES Act, where if they took money out of their pension, or if they were affected by COVID and they split it over 3 years, you want to make sure you do the 89.15 and you do your second payment this
Right,
year.
that's correct. And if not, they're going to send you a bill. They're going to
Yes.
send you a bill.
Yeah.
All right, let's go to Jason. Hey, Jason, how can we help you, sir?
Hi, Esther.
Hey.
Thank you for taking my phone call. So I just had a quick question. My wife and I are in the process of, our great big small idea is to build a home this year. And we currently own our primary residence. We have a very, very small equity loan that we took out to buy the vacant lot. And we also own a rental property that we've owned since 2013. And we just purchased another house to flip. My question is, if we sell all 3 properties this year, 2022, is that good or bad?
Well, it all depends. You know, it just means that you have to understand each asset. If you lived in your personal home for 2 of the last 5 years, the gain up to $500,000 is tax-free. So if that's one of them, and you've lived there for 2 years, you can push that aside. If you're doing the house to flip, if you sell it within a year, then it's going to be ordinary income, and you're going to pay more taxes than if you held it for a year, more than a year. So you might want to think about that, but then mix. You got to look at how the whole cauldron is bubbling. You got to look at interest rates that are going up. I just had a really successful realtor in my office just before the show, and she was saying she definitely notices a slowdown in the economy. So you have to say, well, I got this house to flip. Do I take a chance on holding it for a year to save 4% or 5%, depending upon what your tax bracket is, in capital gains, or should I get it done right away? So that just comes down to your own sense of finances.
Okay, because we just sold a home in the city of Buffalo, and we got whacked really hard on the capital on that because we sold it within 6 months.
Well, see, that was short-term gain, and you paid regular taxes on it. So had you held it for a year or more, then you would have paid a maximum of 20%.
So can I ask you, what is the short-term? Is it more than
anything under a year is a short-term capital gain, and so it's just like wages.
Is there a set? Is it 7 state and 15 federal, or what's the?
It's whatever your tax bracket is. If you're in the 20% tax bracket and 7% New York State, you're going to pay 27% on it. But if you're in the 12% tax bracket federal and you sell a capital asset, you might pay 0% because you held it for more than a year. So if you don't hold it for more than a year, it's taxed as ordinary income, just like wages.
Okay, so like you're saying, it's more or less feel what the market's doing, and then if we think it's best,
right? Because sometimes you say to yourself, okay, so I'm going to pay an extra $5,000 in taxes, but I got this house sold and I just made $100,000. You know, I mean, sometimes it's a cost of doing business. If you think that the interest rates are going to go up and the market's going to slow and you can't dump your house, that has to go into the mix.
Right. And that's kind of our fear. So
Well, I will tell you, I think it's an absolute valid fear because interest rates are going to go up. I just tied up some money the other day at 2.5% at the Pentagon Federal Credit Union. Interest rates are rising. When interest rates rise, it eliminates a lot of people being able to qualify for mortgages. And once that happens, it'll slow up the economy. So something to think about.
Right. And then last question is there any way to shelter any of that money that we make so we don't have to?
Only if you do a 1031 exchange.
What? I'm sorry.
Only if you do a 1031 exchange, where you exchange one house for another house, one investment property for another investment property, and that's done through an intermediary, and that eliminates the tax you paying taxes on that first gain because it goes into another property.
Right, but we wouldn't be able to utilize that credit for a primary residence build.
No, primary, you're not going to pay taxes on your primary.
Right. I just wasn't sure if there was a way to...
No, so you're not going to do a 1031 on your primary. There's no taxes due on it.
Right. I wasn't sure if there was a way to, hide money from the rental.
Nope. If it's investment, you're going to, and you held it for less than a year, it's going to be taxed as ordinary income.
Yeah, maybe you guys could put money into an IRA if you're allowed to.
Okay, Jason?
That's what we did this year. We opened up.
I think the best thing to do is make an appointment here. We'll sit down and chew it up, have a cup of coffee.
That's fantastic. Thank you so much.
All right, thanks, Jason.
Happy
Easter.
Sounds like he does good stuff, though.
Yeah, I just had a client the other day that bought a piece of property in Florida for $390,000. Then his wife didn't like it, so then they bought another house in a gated community, paid $600,000, and then he bought a villa to rent out. Well, the first place he had rented out, the second place when the market went crazy in Florida, he sold the first house for $950,000. That was $390,000. Second house he sold for $1.2 million, and the third house he sold for $600,000, all in 3 months. So, and so these people are making money.
Right. There is a text. It says, I still haven't received refunds since last May. So that's almost a year. Called and they said 16 more weeks from 2 weeks ago. That's a long time. I mean, and everybody's been getting interest statements from the IRS this year. And the reason they're getting interest statements from the IRS is because refunds were really delayed. And so the IRS is paying you interest on those delayed refunds.
That's exactly right. All right, couple of things I want to say before we leave officially the 2021 tax season. What if you owe? Number one, why did you owe? Do you need to change your W-4 at work? The W-4 is very convoluted and it's hard to understand. Sometimes it's best to keep the W-4 that's in place and just have extra money withheld because you can do that with simple math. Let's see.
Also, a pension changes to your pension.
And maybe you should pay estimates. And I was just with a client a minute ago, and she's getting her Social Security, and she isn't withholding any taxes on her Social Security, but she's a large producer and makes a lot of money. So I said, why don't you have 15% withheld on your Social Security? How come you're not having anything withheld on your pension? Those kind of things. If you don't make that decision now, you're going to be back in the same position next year.
Correct. Yeah, I was just with somebody, and I printed a W-4P because she needs to withhold something more on her pension, and then we even did a W-4V for her Social Security. So sometimes you got to make those changes.
All right, and if you have a pension at work and you haven't become part of that pension plan, putting money into your 401k, 403b takes the money off the table so they don't tax you on it. I had a boy last night. He's 25 years old. He's just got a great job making $50,000 a year, and he didn't have a pension plan. He said, how come I owe money? because you don't have anything to shelter. So put money into your pension plan, and it's especially remarkable because the employer many times will match a lot of that money.
I was with a teacher today who was referred to me and her husband, and she is a teacher, and he has a great job, and she just had a new self-employment, and she's making like $40,000-$50,000 in self-employment, and I said, you should be doing the deferred comp or the 403B, and she's like, oh, and so her husband's like, nudge, nudge, you should be doing that. So when you are a teacher, you not only have your pension, but deferred comp is a really good idea.
Absolutely. The other thing is to reduce your tax liability moving forward. Take a look at investing in real estate, such as rental property, because usually the depreciation and all the expenses will have you throw a loss provided your income's under $100,000. And we were just talking about this. Sell your personal home every other year. Every 2 years, the gain up to $500,000 is tax-free if you're married filing a joint return. Where else can you get $500,000 every 2 years tax-free?
Nowhere.
No other place. It's unbelievable. It's in the tax code. And buy stocks. If you're somebody that's that likes to have money in a bank account, once interest rates start to rise, maybe you want to look at stocks because they throw dividends that are qualified, and you might be able to pay 0% on qualified dividends, like we talked about at the beginning of the show. Those are in the mix. So everything is risk and reward, just like that gentleman that's doing the house to flip. You have to say, all right, the risk is if I wait to flip this house for 6 months to make it long-term capital gain, am I really going to be able to sell it when I want to, or should I just pay extra taxes up front? Because remember, you only pay a percentage of what you made in income taxes. You never pay 100%, even though it feels like it does. Well, until next week, I'm Esther Gullius, the tax lady from EG Tax. We will help you if you need help. All 31 of our offices are there to help you. Until next week, I'm Esther Gullius, the tax lady, with Tiffany Fabian, the taxette, and we'll see you. Have a great Easter. God bless you guys. Bye-bye.